All right, guys and gals, welcome back here. Welcome back. Tuesday evening. This is the 4th of February. Welcome back to our nightly newsletter. My name is Joseph James. School of Trades, our website, sidewaysmarkets.com. That's where you're at right now, watching this on our blog. Well, I hate to say this, but we were ready for this today. Markets took a little bit of a break this morning from the action. Kind of a needed break. It's been a rocket ship up and down, and it's been pretty volatile the past few weeks. And if you remember in last night's newsletter, we gave you guys some important guidance last night talking about these big wide ranges that we saw in Monday's trading session. And we thought that would result in probably a little bit of a sleepiness in today's price action. And that's pretty much what we got. So welcome to your newsletter. We're going to talk briefly about what happened today. Right? We'll talk about what we saw in the markets today. We'll give you a recap of what happened today in the markets. And then we're going to grab a look at some charts and get ready for tomorrow. Today's price action leaves the door wide open for some huge moves Wednesday and Thursday ahead of the granddaddy of all news reports, non-farm payrolls, which we're going to talk about in just a few moments. First, equities today. Equities now being seen as a bargain. Of course, Russell, Dow, S&P. It was sleepy, it was sloppy, but they slowly crept higher today by a few basis points. Very big deal. We all knew we were due for this correction. We've had the correction, profit taking, this slump in manufacturing, and of course, overall, just bad economic news has led to these equity markets. Of course, my favorite, of course, being the E-mini Russell, or the mini Russell, the TF. Today we traded the Russell. We bought the Russell this morning in the trade room. Again, sloppy day on the Russell. Opened up inside the ranges. What else did we see today? Factory orders. Now, factory orders was a great example today of news that came in not as bad as they were expecting. So there was kind of a silver lining inside of factory orders. You know, if you guys took out the aircraft, right, the airplanes and factory orders, so we actually got a tick up in factory orders. And remember, the manufacturing sector has been public enemy number one the past few months. So it was a breath of fresh air this morning to see some factory orders that actually had a bullishness to them. So that was good news. Pretty much uneventful Tuesday. Made some money this morning, but really it was like pulling teeth. We really didn't get any big trends. We didn't get any big moves. It was nickels and dimes adding up to dollar bills. And for the most part, a day like today is really what sets apart a professional trader and just someone who's a trader, right? There's a big difference between someone who trades for a living and provides for their family and somebody who just trades like playing a video game, right, for fun. Today was a day that we saw coming a mile away, all right? We talked about it last night, 24 hours ago. We talked about the fact that I was expecting to see the opening bell right inside today's range. That's exactly what happened. So we got everything this morning. I was sitting right here at 8:20 for gold, 9 o'clock for crude, 9:30 for the E-minis. And all three of them, what happened? Opened up inside the range from Monday. That was the first big clue. Very narrow range, very low amounts of volume. So we pretty much knew right off the bat this morning, right out the gate, that we had pretty much got what we expected today. And so that really is the difference. A lot of new traders are going to roll into today's trading action and think it's the same day like every other day. If you tried to trade today the same way that you traded Monday, right? Well, you probably lost quite a bit of money today. So remember, pay attention to these newsletters. We get lots of clues the night before. Remember though, we're always going to be right here waiting for that opening bell the following morning to put that stamp of approval on the clues that we saw overnight. All right, so make sure you guys pay attention. And remember, not every day is created equal. Today we saw big red flags right at the opening print. And if you knew what to look for, you were prepared for a sloppy and choppy day just as we had expected. Now, as we always say, we don't want to predict, right? So I didn't come in this morning thinking, oh, it's going to be a sideways day, going to be a narrow day. No. In fact, this morning, the first 15 minutes in the Russell made it look like this is going to be a bloodbath again today. If you watched the Russell this morning, I'm watching the Russell just tumble at 9:30 going, whoa, another big down day? Nope, it ended up shooting back up and pretty much spent the whole entire session right in that narrow trading range, along with every other market. Crude ends the day pretty much flat, right? 0.03%. We finished off on crude below the 98 big round number, which is good because in all reality, as human beings who drive automobiles and airplanes and consume crude oil, we're all emotionally tied to the price of crude. So it's good to see it below 98 even. Obviously, as a trader, I could care less what the number is. Gold ends up flat on the day, 1253. Russell ends literally flat, capital F, at 1095.6. Some interesting stuff, though, that we saw today. Again, we talked about factory orders. There was a silver lining in that factory order report. What was very interesting, though, just kind of reading around some of the news around the markets today, was copper futures. Now, we don't trade copper futures in our trade room because the margin requirements, natural gas, copper, a lot of these real smaller traded with lower volume commodities, a lot more volatility, those margins are much too high than we like for new traders. So I'm not a copper trader, but I found it very interesting that we're dealing with the all-time, that's in like forever, all-time drop in prices in copper futures. And it all starts with that softening demand starting in emerging markets. Everyone's being affected by this turndown in the manufacturing sector in China, and it's bleeding into bleeding into other parts of Asia, into the U.S., and it's really causing a lot of speculation regarding softer demand. So very interesting. So copper futures, all-time record drop in 2014. Now, if anybody cares out there, right? I know this soap opera in Washington. I just get, I get that feeling in my stomach just talking about this right now. But we get the politicians back in front of the news media again now this week talking about the old debt ceiling. Yeah, you thought we had kicked that can down the road a little bit, didn't you? Well, here we are in February, and we're talking again about the debt ceiling. Newsflash, right? They want us to care about this. The politicians, the news media, everybody wants us to worry so much about this debt ceiling. Well, I hate to break it to you guys. We've had a bunch of debt in this country for a little over almost 300 years now. Our country was built on debt. It was built on a blank check written by Congress to the Federal Reserve Bank that has nothing in the bank, right? That's how this economy works. Don't let these politicians scare you. Don't let the news media try to make it sound like it's going to be the end of the world. If you haven't noticed, it's the end of the world about every 72 to 96 hours on television these days. All right, it's either the monster storm that's going to finish everybody off, or it's year 2000, right? I mean, come on, what's it going to be next, right? Attack of the killer toaster ovens. Bottom line is, don't worry about Washington. Don't worry about the news media. Focus on this, because the price action never lies. If it was really the end of the world, don't you think crude would be going to zero right now? Yeah, I think it would, right? And something tells me those politicians are holding some punches. But what they're doing right now, though, is they got some negotiations back and forth. And, of course, we got the Keystone pipeline. We got the Affordable Care Act, which, by the way, I still can't get on that website, by the way. And so right now they're bargaining over this debt ceiling. I wonder if they'll get it figured out before the deadline on Friday. Ooh, I'm on the edge of my seat. We've seen this before. Don't get too wrapped up in it. Now, pretty interesting history here today. February 4th, 1789. Yeah, that's a long time ago. 1789, George Washington, elected as our first president here in the U.S. His sidekick, Mr. John Adams, no, not the brother of Sam Adams, that Boston beer we all enjoy, no. John Adams as the vice president. So pretty interesting. This day in history, George Washington takes office as our first president of the U.S., and his buddy John Adams as the vice president of the U.S. Now, going forward, tomorrow, Friday's non-farm payroll report takes center stage. Now, if you've been watching this newsletter, you've heard me say this before. There were two news reports that have long-term effects on the markets. What were those again? We saw one last week. It was FOMC. And we got one at the end of this week, non-farm payrolls. Non-farm payrolls, the biggest report we get. It's the granddaddy of all the news reports that we get as traders. And Friday, the first Friday of every month, remember that? First Friday of every 1 month is going to be non-farm payroll Friday. We get it this Friday. Now, we shouldn't have to deal with much jitters ahead of that until about Thursday afternoon. So we're going to talk more about that on Thursday. But just so you're aware, though, you're going to start to hear a lot of people using that non-farm payroll report as an excuse for lower volume or focus being on Friday's report. More importantly, though, do we have any crude traders out there? Yeah, I think so. I'm definitely a fan of crude. I hope you are too. I love that market. We've got a big event tomorrow at 10:30 a.m. We got the inventory report on crude oil. Now, I'm not going to worry too much about what the news says or what it is. I just want to know what time it's going to be tomorrow. And specifically, remember, here's the big deal for tomorrow. Crude oil inventories applies to one market. Now, I want you to think for homework tonight. What is the other news event that we get? I'll give you a hint. It's usually on Thursdays. What's the other news event that only applies to one market? So crude oil inventories on Wednesdays at 10:30. And the reason why it tends to shake this market up is because all eyes are on crude. Okay, think about jobless claims. Applies to all the markets. Not crude inventories, though. It's going to apply just to crude oil futures. So tomorrow, here's how we're going to play it. The news event's at 10:30. I don't care what the news says. Okay, I don't care. Okay, call me crazy, but I don't care what the news says. Bullish, bearish, I don't care. All I know is, as of 10:15, 15 minutes before tomorrow's news, I'm taking the old hands, and whether I need duct tape, handcuffs, chicken wire, right, or a bungee cord, I'm going to tape those hands behind my back if I have to, and I'm not going to touch crude oil until after 10:40. So 10:15, right, we lock up the hands, we're not touching crude. At 10:40, that's 10 minutes after the event. Now, I know, we get these big moves at 10:30. I get it. But if you've tried to catch up to those big moves, if you've tried to trade the news, hopefully in simulation, you've learned that it's almost impossible to predict the reaction of the news report. So while we're trying to predict it and trying to get in before the move happens, just wait for the move to occur, wait for it to pull back, and then jump in on a pullback. Don't be so focused on being the first person in line to buy crude at the end of the report tomorrow. All right? That's a rookie mistake. A veteran trader knows we're not trying to predict the news. We're going to react to the news. So stay patient tomorrow. As of about 10:40, I'll be looking for that new trend, that new reaction. And oftentimes, that initial reaction is actually the opposite move that it ends up going in the long term. We get a busy rest of the week. Inventories tomorrow. Jobless claims on Thursday, and drum roll please, non-farm payrolls on Friday morning. Also, let's grab some charts now because those really narrow ranges that we saw today, well, remember what happened on Monday? Wide range on Monday, narrow range on Tuesday. What could we be expecting for tomorrow? Let's take a look. All right, guys and gals, thanks for sticking around with me here. It's Tuesday evening. Let's get ready for Wednesday. And the first thing I think of when I think of Wednesdays is the old black gold, the crude oil inventories. Big, big, important day every Wednesday. And you can trade this the right way or you can trade it the wrong way. The most important thing you want to be aware of and be prepared for tomorrow is that before the news event at 10:30 tomorrow morning, remember every Wednesday, except when there's a holiday on Monday, we get crude oil inventories Wednesdays at 10:30. Like I said earlier in this newsletter, I'm sitting on hands from 10:15 until 10:40, and I'm really going to have to try hard not to jump into that, right, into a move before 10:40. I know it's tough. It's really difficult. But the reality is usually the first move we see after those news reports are usually the opposite to where they end up going in the long term. Okay, so sit tight after 10:30, wait about 10 minutes, all right, and then find that new direction and trade in that new direction. All righty? So be aware tomorrow. We might be a little bit sloppy before the news event comes out. So what I'm going to do tomorrow morning is I'm going to come in at 9 o'clock. Well, I'll be here about 7 o'clock. But at 9 o'clock when crude opens up, I'm going to immediately begin looking for personality clues. Are we making higher highs? Are we making lower lows? Are we getting follow through in the price action? Are we seeing volume on the tape? If we're seeing low volume and range bound, right, inability to move, then we know traders are waiting for the 10:30 news report tomorrow. So first things first, tomorrow morning, be patient while you get started. Take some time to get to know the market personality tomorrow morning. Now, big ranges on Monday meant small ranges on Tuesday. And that's exactly what we got. First things first, two-day relationship is sideways. You can see here, lower highs, higher lows. We are, as we say in the trade room, consolidating. The range is very narrow. And the closing print right in the middle. Now, look closely at the volume stamp on this, the volume footprint. And you're going to see here the volume was pretty much balanced right in the middle. Okay, now look back at yesterday. Where was the volume print yesterday? The most amount of volume yesterday was a two-sided, or what we call a double distribution day. In other words, we have two big volume prints, which tells us that price started out up top, but finished the day near the lows. Well, now you can see here, they're filling in. Look what's happening. They're filling in the volume footprint. We had a bump here, and we had a bump here. Now, look what's happened now. Now we have the volume in the middle. Now, this is really important because when we have volume like this, remember what I said earlier? Remember what I said last night? Go back and watch last night's newsletter. Remember what I said last night? Last night, my exact words were, we're probably going to end up going between these two volume, what I call them volume bumps, right? They're these big kind of mountains here in volume. So this morning, we filled in that gap. So now we've got a very easy to see range here where we've already explored prices. So it's very interesting to see. This is a completely flat market, a completely flat price. Okay, so we call this balanced, which now means that something else has to come along to push this thing around. Something else. It could be a news event. It could be a natural disaster. It could be a political event. There's so many things. A hurricane announcement. Probably not that time of year yet, but you get the point, right? There are certain things that can, well, anything really, can shake this market up tomorrow morning. If I open tomorrow morning above 97.71, I'm bullish. If I open below 96.78, I'm bearish. Now, what we saw last night was we talked about the fact that we opened up above or below, but look, we didn't. We opened up right in the middle. And that was the first clue we saw this morning that told us that we were going to get pretty much exactly what we expected to see today. I think the most important clue, though, in this is the fact that we have explored all of the price. We see traded volume at the top and the bottom from Monday and traded volume right in the middle on Tuesday. Guys, we've got no more prices to explore. Now the next step is going to be a big move higher or a big move lower. Is it going to be tomorrow? Again, 10:30 tomorrow morning, I got inventories. That sounds like a pretty good event. That might shake this thing up. So look for a possible range-bound morning before 10:30 tomorrow morning. But again, I'm not going to try to sit here and predict. Get me above 97.71, I'm buying. Get me below 96.78, and I'm selling. Simple as that. Let's keep going. Next up here is my anchor chart. Now, I want to remind you all that below this video, I have posted all kinds of these anchor charts. I'm trying to do more of them from different points of view. And what I want you guys to do is give me your feedback on that. Do you like it? Do you not like it? Do you see value in it? Bottom line is, this is going to be the chart I'm going to trade off of tomorrow. But I've also published for you in this newsletter all of the other slower anchor charts so you can see a bird's eye view. So make sure you take a look at those charts as well so you can see the other viewpoints, okay, on crude, gold, and Russell this evening. Now, at first glance, we've got a trend going on right now. Now, of course, this is my anchor chart. This is a 24-hour chart. That VIP chart is only an open and close chart. So the VIP chart that you just saw only shows me from 9 o'clock until 2:30 p.m. Eastern Standard Time, right? That's the pit session trading hours, the open outcry hours for crude oil futures on the NYMEX exchange in New York City. This is a 24-hour chart. This will be what they call the Globex chart. Okay, Globex is actually an exchange. It's an electronically traded exchange that the NYMEX exchange actually uses, right? They actually pay for us to be able to use the Globex, right? It's pretty interesting how it all works, right? There's actually two exchanges. There's the NYMEX exchange where we actually trade open outcry, right? We're the pit. And then you've got the Globex. That's the electronic session. It's a completely different exchange. And what happens is NYMEX, because they want to get more people involved with crude oil, right, because they're a business like everybody else, NYMEX wants more traders on crude oil. They're going to make it available 24 hours a day via Globex. All right, a little bit complicated. Ask me for more help tomorrow in the trade room. I'd be happy to give you more information. Looking though now, okay, we closed the day down here, but look what's happened here overnight. We've started to get a little bit of a push higher. Now this tells me clearly here, we get a bullish trend. I'm above all of the moving averages. So right now, with the exception, now who sees the red flag on this? Members, where are you guys at? What's the red flag right now? I'm bullish. What do I want to do when I'm bullish? How do I know I'm bullish? Well, you can see I get a channel here. I get a green cloud. I'm above all the moving averages. So clearly I'm bullish, right? Buyers are in control. But knowing the buyers are in control is only half the battle. Members, what do I need to be worried about right now? Ah, that's right. You've been paying attention. I want to buy at a discount, just like buying a brand new automobile, just like buying a brand new pair of blue jeans. Do I want to buy something when it's been doubled in price? No. I want to sell something when it doubles in price, but I want to buy something when it drops in price at a discount. So the only thing I need right now is I'd like to see price pull back before I go trying to buy right now. Okay, that's the only thing. So right now, we'd be buying at a premium. Okay, you don't want to do that. Now remember, like anything else, if you buy something at a premium, you're probably not going to realize that you got a bad deal on it until what? Until you try to sell it. And so obviously, we're going to wait here and see if we can't get a pullback on this for crude. Okay, so look for a pullback, and then we're going to get long. I've got no reason not to right now if I'm trading overnight. Now, of course, as always, we're going to give you guys some targets to the upside. 98.09, that's going to be my initial target. Might be a little bit lower than that depending on when we get there. Okay, if we get there later on tonight, now it's going to be more like 98 even instead of 98.09. So just keep that in mind. As of right now, though, 98 even looks to be your easiest target, and 98.09, right, give or take a couple ticks. So be conservative. Just make sure you're not trading directly into that high. As you can see here, we got a little bit of a wedge that we found on this chart. And so what I want to do is I want to buy here, but I want to buy, though, and give myself some room to go up into that resistance. I'm definitely trying to hold on to a profit target here, guys, 98.44. 98.44. That's my big target right there. All right, I'm going to try to take some profit off here at 98 even, but 98.44, that's my dream come true target. That's going to be a symmetrical target from the A, B, C to the D. Okay, very, very powerful. If you want to get a little bit greedy, you get another target up top here at 98.84. Now, as I keep going higher here, again, I would encourage you to look at the charts that I've posted on the blog right now so you can see some of the bird's eye views of this, because you can see there's a lot of support, a lot of resistance on this chart. One thing you got to remember, though, on this anchor chart is that we are definitely seeing a price wedge. Now, what that means is that I'm going to take some profit at the highs here, but if it doesn't keep going, now that tells me I have the chance here now for a price reversal off that high. I'm still going to try to follow the trend, which means ideally I want to buy at this low. But either way you slice it, though, I'm going to be able to sell the highs and buy the lows of this wedge. And then tomorrow morning, we're going to be here front and center at 9 o'clock looking at the opening print tomorrow morning when the opening bell rings. Because as we said earlier, we know that if we get outside this range, above 97.71, look out. Right? We're going higher here. As of right now, you can see I'm at 97.78. So we're right around the high of that here. So we're looking bullish on crude here. But again, you're buying at a discount. So be patient, wait for that price to pull back, and then jump into action. Now we go from the black gold to the gold. Another disappointing market today. Well, I shouldn't say disappointing. We got pretty much exactly what we bargained for. We saw a sideways, this is all going to be pretty similar here in all three of these, sideways two-day relationship, a very narrow range, and a closing in the middle. Now, we talk about these ranges. Yeah, this is a narrow range. That's a typical range. But look at this today. Whenever we talk about trading ranges, I'm referring to an uncharacteristically narrow or wide range, right? One that makes you take a double take. We go, what? Is that really the range? When you find yourself thinking like that, that's when you've got an important clue. There's one right there. There's a very narrow range. Look what happened after that narrow range. Look at that huge gap down overnight. Is it going to happen again? It's tough to tell right now, but we know that we're right set up here now for a big day higher or a big day lower. You know what I'm looking for. Open above 53.6 and I'm bullish. Open below 46.8 and I'm bearish. Very, very important. Now, if we end up above 53.6, you know where we're going. I've got 66.1. I've got 69.7. That's the prior week high. And then as we go higher, I've got 76 even. And then, of course, you'll see there are levels posted there above up to that 1,300 big round number. All righty? If we go lower, we get a big wide open space down here. Once we get below last week's low, open below the 46.4, we should end up right at that 37.9 pretty darn quick. The real test, though, is going to be, can we get below this area right here? Because remember, you had 2 weeks ago's low, last week's low. So this is going to create a little bit of a kind of a pocket of support right here. But if we get below it, look out below, I've got that 1218.7 level waiting for me as a nice, big, juicy runner target. So it all depends on where we open up tomorrow morning. Let's take a look at how the anchor chart looks. Because remember, the numbers I'm looking at are 46.8 and 53.6. Where are we right now? Overnight, we're trading at 52.7, so we are still inside that very narrow range that we saw today. So nothing getting us excited yet, but the anchor chart sure does look pretty bearish, doesn't it? Now, once again, this is the faster of my anchor charts. I want to encourage you to look at below the video at the different charts that I've posted so you can see the bigger picture, the bird's eye view. Now, this looks very similar to crude oil, except for the fact that we are opposite, right? Gold moving lower while crude was moving higher. Now, what I want you to see is that I've drawn some trend lines here. And these trend lines are going to be important because just like crude oil, we've got a consolidating market, right? This consolidating market's important because when we see a consolidation like this, I'm going to buy those lows, I'm going to sell those highs, and I want to avoid that middle, all right? Avoid that middle. As I zoom back in on this now, and again, you'll be able to see the big picture on the charts that I posted below this video. Here we are, though. We actually look like a very good spot here to be doing what? Selling short. Why? Well, first of all, what's my trend? I've got a long-term bearish trend down. Again, looking at the VIP chart, you would never really know that, but this is a 24-hour chart. On gold, gold is open Eastern time from 8:20 a.m. till 1:30 p.m., again, Eastern Standard Time. This chart is a 24-hour, 7-day-a-week chart, which means it's going to fill in those gaps. And so whereas today, all we saw today was this sideways range here, when you look at it in a multi-day standpoint, we are moving lower. Now, we talked about this on crude. My job when I'm selling is to sell where? Where was it again? That's right, at a premium. I want to sell when prices are higher. I want to buy when prices are lower. Whether I'm day trading, buying a pair of blue jeans, right, or shopping for filet mignon. I want to buy at a discount. I want to sell at a premium. So what does that mean? Where am I right now? Well, here's a clue. Where would be a discounted price? Right there. There is a discounted price right there. So I don't want to sell there. I want to sell at a premium. We look pretty darn good. So we have a premium on gold right now. We have a downtrend, and I have a juicy target here at 1243.9 that's just begging to get tested here overnight, tomorrow morning, right? Eventually here. So the only thing that I got to worry about right now is getting below these key moving averages.
Once I get below those key moving averages, then it's going to be off to the races to sell, sell, sell on the way down. So gold, although very narrow and consolidated, clearly here though has a bearish trend. And what I'm looking for now is get me below this 1252 area. And that's going to give me some wide open spaces now to be able to get to the short side. The anchor chart tells me when and where to be looking for a trade. Then I move to my entry chart time frame, which you don't see here. We'll wait for that tomorrow morning in my trade room. But my entry time frame now finds the entry pattern and allows me to profit safely with a limited amount of risk. All right, guys, so crude bullish, gold bearish, going into the overnight session and into tomorrow. How about that mighty mini Russell? Is this the same chart? Nope. Yeah, I told you. It's all going to look very similar here today. Again, two-sided, sideways range, a very narrow, right, as I say, a very uncharacteristically narrow range, and a closing print right smack dab in the middle. We take a closer look here now at the volume prints, and we can see here the volume pretty much filled in right in the middle of that range, which tells me the buyers and sellers were pretty much in agreement. So very interesting price action this morning on the Russell. It was a rocket. It was basically tumbling at 9:30, and then by 9:45, it was right back to new highs. It was pretty incredible this morning. We thought for sure it was going to make those new lower lows, but it never did. Turned right around and went right back into its range around 1100. So big round number. I believe we talked about this yesterday, right? There's that big round number of 1100. Remember how I said last night, don't be surprised if we sit here on top of that 1100? Yeah, that's exactly what we said last night. That's exactly what happened today. I'll tell you, this JJ guy might just know what he's talking about. I don't know. Tomorrow, what's my plan? Am I trying to predict? Absolutely not. I'm trying to react. If I open above 04.9, I'm buying. Where am I buying to? I've got last week's low at 15.8. That's going to be an easy target. And then I'm going up to 27.7, 35.6, and 42.7. Those are my number one levels. So as we go higher, I'm going to the 15.8, the 27.7, the 35.6, and the 42.7. That's, again, if we see an opening print above 04.9. What about below? Now, you'll notice I err on the side of caution here. The actual low is at 89.2 from today. But I'm going to use this 86.6. It's just a little trip down the old chart here. So get me below 86.6, and I'm looking bearish. Where am I going to? 74 even, 71.3. And look at this big wide open space that we have here. Look at that wide open space that we have between major swings on the 30-minute chart. So we get down to 74 even. You better believe I'm holding a runner because it may become a bloodbath tomorrow. We never know, right? And that's the beauty of being a trader. You never know what you're going to get. So my job every day is to come in prepared to execute my plan. I don't know if those trades are going to be just little nickels and dimes or they're going to be big, fat dollar bills. I don't know. All I do know is I'm going to come in tomorrow. I'm going to trade that plan, and I'm going to do it with confidence. Moving forward here now to the anchor chart on the Russell, and again, I would encourage you to look at the other anchor charts that I've posted for you guys. You can see here now we are pretty much flat. Now, I know you can see there's a bullish channel here, but what I want you guys to focus on here are the moving averages. The moving averages, what we call trigger lines, those moving averages are FLAT, flat. There is no cloud. There is pretty much, we got a double bottom here, head and shoulders. It's going sideways. So right now, it was easy for us to see the bullish trend on crude. It was easy to see the bearish trend on gold. Does this look the same way? Definitely not. So we want to be careful on the Russell here overnight, right? These E-minis, these equity markets are very, they're unpredictable, that's for sure, right? We get a lot of external fundamental factors that are kicking into gear right now. As you can see here, though, I've listed some levels here overhead. We're going to use those levels as profit targets if we buy. We'll also look for price to bounce off and then give us a trend that goes lower and sells short. But again, right now, my main focus is being ready for tomorrow. I don't see much of a trend clue right now on this anchor chart, which tells me the most important thing for me today is going to be protect my capital, wait for tomorrow morning at 9:30, see where the opening bell takes us, and I've already given you those levels to be aware of. Now, overnight, if we happen to just tumble and fall out of bed, obviously we'll be ready for that and we'll be selling. If we start to jump higher, we're already in a bullish channel. So if we do go higher here, we definitely want to be open-minded here to buying here and use the 11s, the 25s, and the 34s as our targets overhead. Oh, and of course that trend line, right? That little trend line there. So make sure we use that as a target. So short term, slightly bullish. I'm going to call this thing sideways. I'm going to err on the side of caution and come back and see it tomorrow morning at 9:30 and see how we're looking. All righty? So tomorrow morning, come see me in my trade room, Monday through Friday, 8 a.m. Eastern time. I'm going to invite you guys in as brand new students tomorrow morning. Also, don't forget, join our free trial. As part of our free trial, I have a special invitation for you to come see me tomorrow afternoon in my trade room in the afternoon, okay, as a guest. So nice, exciting opportunities there to come see me trade tomorrow afternoon as a guest. Don't forget to send this out to a friend. Share this newsletter with anybody else on the planet that you think would see value in it. They'll thank you for it. And don't forget, tomorrow we got crude oil inventories at 10:30, so be careful if you're trading crude. That does it here for me now, folks. Thank you so much for tuning in. From the entire team here at School of Trade, our headquarters in Los Angeles, California, my name is Joseph James. Remember to learn it so you can earn it. Adios, amigos. Bye-bye for now.